Latest headlines from UBS and Deutsche Bank, because we're talking about billions of dollars in, call it what you will, but major mistakes. Their stocks are going up on the news.
It's incredible. UBS, $15 billion. Deutsche Bank, actually, we also, now practically every country in Europe is part of this mess. But again, the market's reacting positively. Our Fox panel is here to talk about it, including Peter Schiff, who doesn't shrug this off at all. He's author of Crash Proof, Rick Newman from U.S. News and World Report, Terry Keenan from Fox News, and Scott Martin from AsterLLC.com. So, Terry, why?
Well, you know, someone told me a long time ago, and this is kind of counterintuitive, but the dumbest bankers in the world are actually the Swiss bankers. So I think the thinking is that they've written off everything, they've thrown out all their dirty laundry.
They got rid of the chief at UBS.
Exactly, and so that maybe this actually puts in a bottom. But, you know, how many times have we been sitting here saying that we've hit the bottom? At least 3 or 4 times so far in 08. So, you know, you have to be a little careful, but these financial stocks are down 50, 60%. That's about what they went down in the early 90s. So you can make a case for a bottom, and we're certainly seeing that today.
And look at Deutsche Bank, up nearly 3%. But, Rick, as you see these stocks moving higher on just horrible news, which is, okay, that's the way the market works, UBS's loss alone of $19 billion is something like 5% of the Swiss GDP, I was reading. So this is no small chunk of money.
This reminds me of Don Rumsfeld, who used to talk about unknown unknowns and known unknowns. And this market has discovered there's something worse than bad news, which is unknown news. How bad are these securities? What's in there? How bad is the toxic waste? And it feels like this huge sigh of relief as we start to, the unknowns start to get quarantined over here. We're getting rid of them. That pile of bad loans seems to be getting smaller. The more we know, even if it's bad news, it's something we know, and it's more predictability and more transparency.
All right, it's time for a little cynicism in all this, or at least skepticism of this happiness and glee on Wall Street. Peter, what do you think?
Yeah, you know, I don't know why Sandra Smith's explanation makes as much sense as any, that it's April Fool's. You know,
that was her last comment in jest, Peter.
Well, I don't know what, you know, I've heard one of the spins is that these losses are so horrendous now in Europe that it's going to put pressure on the ECB to cut rates. And that's what put a bid in the dollar today, and maybe that's why the market is rising. But, you know, if you look at the other data that came out, German unemployment today is at a 15-year low. I think the ECB is still more likely to hike rates than cut them. So I would sell into the rally. I don't think it's real.
Scott Martin, what would you do, or at least advise the people who ask you for money advice? Because people look at what's happening today and say, oh, now we know everything that's bad. Right. And there's no way we know everything that's bad. I just want to tell our viewers that. But the perception is that the worst is out there. Time to take a breath and move on and up.
That's right, Liz, and we don't tend to buy on days like this. I think it can be a pretty big trap, and I got to kind of side with Peter on this one. I mean, my theory is that Major League Baseball's back, so maybe Wall Street's on steroids again. I mean, I just have no idea really what's going on with the market today. I'm pretty surprised, and you're seeing a lot of it in the autos. But I do think one other thing's going on here is, as we went into quarter end, everybody thought we'd do this window dressing, right? Financials, autos, home builders, and maybe we're seeing some of that today. Some of these institutions that didn't want to hold these stocks going into quarter end are picking them up on the cheap today with hopes that they rally into the second quarter.
But, Terry, Peter brings up a very interesting point, which is that the strengthening of the dollar may be because of the fact that things are bad in Europe. They have to lower their rates, which, of course, would make U.S. Treasuries and other securities more, more valuable to the Europeans. So that could be good news for us.
Yeah, perhaps, but I just kind of agree with Peter. I don't think the ECB is going to cut rates. They've been kicking and screaming. They had a bias to raise rates back in August when we went into this whole mess. So I'm not sure if they're going to. I think but there was a factor of a lot of people kicking out. You know, they didn't want to have Citigroup on their quarter-end balance sheet, the portfolio report, and some of these other companies. They might be buying those. But you have to ask, what's the profitability of these companies going forward? You know, the mortgage lending has shut down. The lending for deals has shut down. The derivatives trading has shut down. So these stocks might look cheap, but you have to remember their earnings are going to be really encumbered going forward.
Rick, yesterday we had an executive from New York Bank, Bank of New York Mellon. And as he was leaving, we said, you know, what do you think when people say, oh, Citigroup or insert big bank here is too big to fail? And he said, nothing's too big to fail. So is another one of these things hanging over our heads?
This is part of the stability that the Fed has brought. Sure, the problems could be hanging over our heads. It seems the Fed has made the case very clearly that Whether they're too big to fail or not, they're not going to fail right now.
And what about the ups and downs of a company like Lehman? Take Lehman, which was beaten down terribly over the past couple of weeks, up 13% today. Is this just people catching a falling knife, or is there real hope there?
Well, they just announced that they were able to raise, what, $4 billion.
Yeah.
Now, they did it with a preferred, and they're paying 7.25%, which isn't as high. I think Citi paid 9%. But
Yes,
still,
yes.
that's expensive money, I mean, in today's market. And, you know, I don't know the fact that people were willing to buy it. One of these days, they're going to try to stop catching that knife. I mean, all these people that are coming into these issues for these banks are
We had a
losing money.
telecom yesterday who had to place bonds at 13%.
Who was that?
That was Fairlawn.
Fairmount.
Fair point. Excuse me.
Yeah, I don't know.
Peter's right. I don't think a single entity, whether it's a foreign government or an investor, be it Eddie Lamper, has made money trying to invest in these.
Just the coupon. I mean, they're making the coupon.
Yeah, they're making the coupon,
But
right.
they're also losing on the foreign exchange.
And Scott Martin, we look at all of the U.S. mutual funds, and many of them lost money this past quarter, and a lot of people have taken money out of U.S. mutual funds. So where's the money to be made?
That's right, Liz. And I mean, you're seeing some disastrous numbers that are coming out of these mutual funds. And again, I think it's coming in, Liz, to where these depressed markets are right now, where these depressed sectors are. And that's where some of the money is flowing into right now. And you're seeing some of these people take out money of mutual funds, and maybe they're investing it on their own. Who knows? We'll figure that out, I guess, in the next couple of weeks, but to see if this rally lasts. But again, I think you're going to have to be these mutual fund managers that are coming out now as it's 4-1 and saying, okay, what are some of the depressed sectors for the second quarter? And we're looking at those rally right now.
Okay. By the way, we're